Even look on Monday mornings. Not pre-market. Everybody's waking up. Everybody's doing their thing. So let them do their thing. Welcome to the room, guys. I'm excited. Hope everybody had a great weekend. Hope you guys are ready to do a little learning, little talking. But before we do it, of course, guys, I have to say this is an educational room. This is an informational room. This is a room that is designed to teach you to read your indicators, not a room designed to call trades for you. So I've got to put that out there every morning, make sure it gets in the video. And then we're going to check news. So for those of you that are new, we go through this routine every morning. One of the first things each and every morning is we go to forexfactory.com/calendar together, and we're looking for high impact news. Today is Monday, November 10th. And there's really not a lot going on. We've got some FOM speakers, something about Cleveland Fed inflation expectations, but they're all low impact. They're all yellow boxes. So we're just going to look for patterns and do what we do. Let me pull up my slideshow here. I see a lot of new names in the room. I love it when we have new names in the room, guys. I will make sure to gear this first hour for you newer people. If you are one of my new people in here, I want you to do me a favor. Good morning, Cav. I would like you to absolve yourself away from the burden of trying to be perfect in your first couple days. Your first couple days with Nexgen, guys, you're going to start to learn the language. You're gonna learn what things are called. You're going to hear phrases repeated. And your first day, you're going to be like, oh my gosh, this is a lot. And it feels a lot like drinking from a fire hose. And I think I like to show this one not to scare you off, but to create some realistic expectations, guys. You are starting your journey for the greatest job you could ever have. Learn the lingo. Don't feel like you have to be $1 million trader in the first 3 days. If it were that easy, everybody would be one. What we're going to do is we're going to learn to read charts. And this is what I do every day. I go through checklists, 3 rules, 2 charts. It's as minimalist as I know how to do it. I'm very right-brained. I'm not a technical kind of person. But what we do is we build a foundation that allows you to learn to read your indicators so that you can recognize advantages. Those advantages become your trade. And chart reading accounts for about 90% of the typical day. Guys, active trading is only about 10%. And the more time you spend in the markets, the more you realize that this is true. You're going to understand through your chart reading where the market is likely to continue, where it's likely to go, where it's likely to stop. These concepts become ways to enter, to manage, and most importantly, to embrace the 90%, guys. Futures markets trade billions hourly. And what you'll find is that there are times when you have an edge, and that's when you get excited about entering a trade, but there's also times when you don't. And that's where you're going to learn to pump the brakes. So in this room, in the first hour, we talk about high probability trades. We cover Ninja Trader. We've been doing Ninja Trader forever, excuse me. And we talk about TradingView, apples and oranges. While they have a lot of similarities on the indicators because of bar structure, time frames, they're very, very different. So if you're new with me, make sure you know which platform you're on. Good morning, Bejoy. But either way, we're going to look for high probability trades, guys. We're going to look for all indicators on all charts aligning with the rules for the trades. These are trades that are presented, that are put into a plan for you. The plan is handed to you, study is handed to you. And it's your ability to recognize this one trade with only 3 rules that opens the door for you to see, to recognize, and to manage the more trades that you'll find as you grow. So your understanding of the high probability trade takes you to being able to recognize a medium probability trade. And this is a trade where most of your indicators line up. However, small issue exists, guys. One of the advantages is gone. And you'll take these. This is probably going to be the majority of your trades. You'll manage them a little more assertively. Probably take profits a little bit quicker. Get to break even just a little bit faster because you know that it's not the perfect trade. You'll also be able to recognize what we call low probability trades, multiple conflicting signals, advantages going away. And when you're in a low probability trade scenario, guys, a lot of you are just going to say, you know what, I don't need that trade in a market that trades billions. I don't need that trade in a market that offers so much opportunity. I'll just wait for a better trade. You will be in control of the entry. Trading is an individual sport. There is no we. Do we take a trade? No, you take a trade. Hey, are our rules met? Well, your rules have to be met, guys. You're going to control the entry. But when you know what's working for you and against you, it helps you make decisions, not only on entering, but how aggressively you may need to manage it. Over the first hour, we're going to learn Sugarline and Fibonacci rules for when it's okay to trade. When I say it's okay to trade, guys, I want you to believe that it's okay to trade when the rules are met. And give yourself permission. It's okay not to trade when the rules aren't met. There is a path that has been proven. Nexgen's been teaching online for the last 20 years. Nexgen's been teaching people to day trade for the last almost 30 years. Guys, simulate and practice. Get onto your NinjaTrader platform, get onto your TradingView platform, and practice. Practice following the rules. Practice taking the trades. Practice recognizing the advantages. And if you really want to speed up the process, post your trades in the room. And it doesn't have to be a trade. Post your chart read in the room if you're learning to read those indicators. Hey, Mark, this is strong triggers, right? Absolutely it is. Every time you post in my room, you get a private session. You and I will talk about what you did. I will look at what you wrote on the chart. We will talk about everything that's going on. And Jen says, hey, Mark, check it out. Upon entry, no momentum, large above the mid band, room to target, weak bottom, no divergence, pulls back to it. I mean, she wrote out everything that she did. She knew exactly why she took the trade. She knew exactly what was working for her. She knew exactly what was working against her. And she took a conservative shot at quick profits in a market that's been consolidating. Jen, nice trade. And what we're going to do is when I look at this, if I say, hey, Jen, let's talk about how you could have gotten a better entry. I don't think she could have. Hey, Jen, let's talk about recognizing trouble for first profits. She did. Jen did everything that she needed to do there. Fantastic job. But we're going to go through every picture posted in the room, and we're going to go through that process of recognizing advantages. No, I got you, Jen. We're going to go through the process of identifying advantages, looking at entries, talking about exits, and making sure that the chart reads are correct and that really that you did it the best way you possibly could. If you did, virtual high fives. If you didn't, this is where the magic comes in, guys. We talk about what the challenge was. We talk about what could have been done better, what read could have been more accurate. And I don't just say, oh, you screwed up that trade. I say, hey, here's your mistake, and this is how you fix it. Hey, good morning, Josh W. Great to have you. First time in the room. Awesome. Did you get my warning about there's going to be a lot of language coming at you on day one that's going to feel foreign? But if you listen in, guys, what I find is that typically by day 3 or 4, my new students are already calling entries. My new students are already seeing it all come together. So welcome to the room. Ask a million questions. I am here for you. I work for you guys. I don't work for Nexgen. Guys, simulate, practice, post. Simulate, practice, post. The people that post the most get to where they want to be the fastest. There's no doubt in my mind about that. And it's intimidating in the beginning, especially if you make a mistake. But mistakes are where the good stuff comes from. The second thing is keep it simple. I am a simple man. I have, with the help of John Novak, written plans designed, and I'm going to do the NinjaTrader one first, designed to optimize your chances of success, guys. These are stepping stones. These are the trades that teach you to read your indicators. Through study, simulation, class feedback, and practice, you will write a plan that suits your needs. These high probability trades aren't necessarily your get-rich trades. They're really the trades that allow you to see the get-rich trades. It's only 2 charts, it's only 3 rules, and guys, you have a checklist for entry and a way to manage. So simplicity pays dividends. Whichever platform you're on, you'll get that same 3-rule checklist. You have to learn the looks. Trading is patterns. I didn't realize that when I first started, but trading is a pattern that you can describe. Trading is a pattern that is predictable. Trading is a pattern that is provable. And you can prove that that pattern wins more than it loses. And that's what creates the edge. So the second thing that I'm going to give you, and I'm going to drop all this in the room right now, are these spreadsheets. And these spreadsheets are just study tools, giving you the ability to go through and see these patterns. Not just the rules for the trade, but also each rule broken down individually, letting you know exactly what it looks like to have your rules met, letting you know precisely what the advantage looks like in the moment. I'm going to drop those in the room. The second page of the Ninja Trader one is client trades, guys, and it's like 500 pictures of the pattern. Next-gen users that are presented in the room. I believe this is the page that's going to give you like the biggest advantage going through, because you're going to recognize that everything that we talk about in the first hour has been repeated over and over. It's been repeated over the last 5 years. It's been repeated by different people, different time frames, different walks of life. And the market doesn't know where you come from or what you do for a living. All it knows is whether or not you're getting in on the pattern. So whether it is the Ninja Trader sheet, a place to build your plan, trade tracking sheet, or the Trading View sheet. The Trading View sheet is eluding me right now. There we go. Trend trade, momentum trade, management, termination conditions, and then tracking pages, guys. Both spreadsheets have tracking pages, because that's really one of the ways that you're going to get to where you want to be. Post in the room and track your progress. Because when you post in the room and you get that private session, you get feedback. And the feedback is going to be very revealing. All of us have a thing when we begin to trade. Some of us trade into termination conditions. That was my thing. Some of us jump in too soon. Some of us jump out too late. Some of us fight triggers. Some of us trade, whatever it is. You're going to see it in the feedback, and it's going to begin to repeat itself. And if you put 3 or 4 pictures in my room, I'm going to see your thing as well. So the easiest way to not only recognize but avoid is to go through this little habit each and every morning. And let me find the picture for it. Da, 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 da. Every morning, guys, and I still do this, and I'm 6 years in. Study what you did yesterday. Just one good trade is all it takes, right, Joel? Study what you did yesterday and say, hey, what worked? And you're literally identifying what it is that seems to be bringing you success. But I also want you to ask yourself what didn't work. That's where the feedback comes in. That's where, if you don't recognize it in the moment with the adrenaline, the anxiety, that rush, I'm going to see it in your still chart when I look at it. And guys, we'll talk about it. And when you identify what doesn't work, you can write it down on a piece of paper in the biggest, most delicious crayon you own and say, this is what I'm going to focus on avoiding today, and this is what I'm going to focus on repeating. And if you go through this process every morning, you really will speed up the education process. It'll streamline, and you will stay focused on the best of the best. So we're going to learn it. You're going to simulate it. Gonna keep it simple, guys. I encourage you all, don't let this be a lecture. Turn it into a discussion if you need it to be. I'm going to give you the analysis, the rules. I'm here to provide the coaching, guys, but it's up to you. If you're brand new in here, purchasing software doesn't make you a professional trader any more than buying a hammer makes you a carpenter. Learn to use the tools. I'm here, but you got to do your part. You got to post in the room. You got to use that spreadsheet. So for Ninja Trader, it's only 3 rules. That's it. You're going to want to complicate it. I've actually taken the phone call that says, Mark, you can't make money on only 3 rules. I disagree. Each rule provides an advantage. And the advantages are what create a trade. Your desire to make money has nothing to do with taking a trade, guys. Your need for a new car, to pay your mortgage, to send your kid to college, your trade doesn't care. So we're going to look at 3 simple rules. When they're true, they provide advantages. Momentum, clear path, and entry. Once you can recognize the first 2, the advantage of a clear path, the advantage of momentum, you really do have the keys to the kingdom, guys. And you'll find that everything Next Gen teaches beyond the basics And really everything that you guys seem to create for yourself beyond the basics all revolve around momentum and path. It only takes 2 charts to prove these rules true. We use a large chart and a small chart, both platforms, large chart and a small chart, guys. Your large chart is slow. It's a very broad stroke of a brush. It doesn't move nearly as fast as a small chart. And it shows you the overall opinion of the market. It will define direction, letting you know which direction you should be looking for your rules to be met. It'll define the momentum in the market, letting you know when that edge, when that advantage is present. And it'll also define the areas in the market that could stop a market, that could create a bounce. Rules 1 and 2 are met on the large chart, and they're met inside of 1 bar. So the most current printing bar will define direction, momentum, and areas. When the rules are true, when you have those first 2 advantages in play, rule number 3 is nothing more than an entry rule, guys. It's designed to pinpoint exactly where the market is most likely to bounce and continue with everything going good on your large chart. Inside of that 1 bar, starting from the very bottom when you decide to take a trade, you'll typically see in a successful trend trade a retracement, which is a small move counter to an underlying trend. You'll very often see it bounce off of an area and continue in the direction of the trend. All of this happens inside of that 1 bar. This allows us to reduce risk dramatically and increase the profit potential. We use these 2 charts because you're not in control. All you alphas that just joined my room, you're not in control. Guys, the large crowd wins. These are the men and women with the money, with the influence, and they dictate. They wake up and they say, hey, what a great day for the market to go up, or what a great day for the market to go down. And sometimes there's the large chart buyers and sellers, and they don't agree at all, keeping you on your hands waiting for someone to win. The large crowd, when those first 2 rules are met, typically wins 70 to 80% of the time. Your small crowd creates that little pullback to the area. That small crowd pushes down. That's where your amazing entries come in. And when the large crowd is amped up and providing advantages, the small crowd typically loses 70 to 80% of the time, which means when the rules for the high probability trend trade are true, you have a trade that you can back test, that you can verify, and that you can prove typically wins 70 to 80% of the time. If you've ever done any study, watched Mark Douglas tapes, you'll realize that trading is probabilities, guys. And while you never know what the outcome of a trade is going to be, you can say, hey, good morning, Junior, good to see you. You can say, with this pattern, I have an edge. If I take it 100 times, I'm probably going to win 70. I'm likely to lose 30, and I never know how that's going to play out. So I'm going to focus on consistency. All right, so now we're going to talk about indicators. So if you're new with me, on these 2 charts, you're going to see some stuff. Thank goodness you don't have to know what creates them, because I'm not a tech guy at all. I'm definitely not a math guy. But both charts will have areas, and they all have names. So there's divergence highs and divergence lows, and divergence means that there was a loss of momentum at a pivot. So perhaps the buyers are in control and the market is moving up, and right at an exact price, the market heads back down. Well, if you see that magenta line print off that pivot, the sellers stole the momentum from the buyers. And the same is true at the bottom. If the sellers were in control, there is an exact price represented by that cyan line where the buyers steal the momentum from the sellers. You're going to see Fibonacci resistance, Fibonacci support. These are single red and blue lines made up of tens of thousands of calculations. There are yellow 1-to-1s. This is a Fibonacci line that's made up from 1 calculation. Institutional traders use them for targets, they use them for entry. And then you're going to see a mid-band, and the mid-band runs through the middle. It's a moving average. When price is above it, it'll turn green for you. It can behave as support. Price is below it, it'll turn magenta. You can use it as resistance when the rules are true. And then we have triggers. And triggers do 90% of the work with what we do, guys. You really are. You're learning to read trigger lines. There are small triggers. It's two solid lines. These are a fast-moving average, and they're the same no matter what time frame. Small triggers are always small triggers. You also have large triggers, two dashed lines. They are a slower moving average. And again, no matter what time frame they're on, they look exactly the same, guys. When they're green, they're going up. When they're red, they're going down. You're going to use trigger lines first to define momentum. Rule number one, making sure that that first advantage is in play. You're going to use trigger lines to define what we call termination conditions, areas that can stop the market. And you'll use large trigger lines to pinpoint your amazing entries. So triggers show up in everything that you do. And we're going to break it down individually. Only 3 rules. One of the things that I encourage new users to do is learn how to recognize individual advantages. Instead of looking for a trade, look for the pieces that create the trade. And what happens, let's pull this one up real quick. What happens is you will string these 3 advantages together. So we're going to talk about strong triggers. On the spreadsheet that I gave you, there's like 65 pictures of just strong triggers annotated, showing you exactly what it means to have that first rule met. There are pictures of a clear path describing exactly what it takes, and there's also pictures of entries, guys. So learn the pieces that create the whole. It all starts on the large chart, and it all starts with strong trigger lines. Strong trigger lines create the advantage of momentum. So on your large chart, direction, momentum, and areas, guys. Direction is defined by the color of the background. If the background is green, it's up. If it's red, it's down. Pretty simple. If you're colorblind, seriously, let me know. When the small triggers break above the large, that's what paints it green. When the small triggers break below the large, that's what paints it red. And that kind of sets you up for what it looks like. In an uptrend, strong triggers means that your small triggers are up and above the large triggers, that there's space between the two. It's one look. If all of the colors match and you can see sunlight between those 2 triggers, you have strong triggers. Same is true in a downtrend. If all the colors match, background and both triggers, and you can see space between the 2, you have strong triggers. If you can't see space between the 2, if the small triggers have worked their way back inside of the large triggers, you have weak triggers. I believe language is important. If these are strong and these are weak, only one of them makes you feel like you have an advantage. Guys, when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend, whether it is up or whether it is down. It is strong triggers that we look at to break key Fibonacci areas. It is strong triggers that'll cover a lot of the mistakes that I made as a new user, guys. Momentum is rule number 1 for a reason. And when you have momentum, it's going to be difficult to stop that market. Now, weakness, the phrase I want you to think is anything can happen up or down. With weakness, very often, you will see reversals from the middle of nowhere. With weakness, very often, you will see key Fibonacci areas holding. So if I pull up a large chart, and this is crude oil, and I'll just blow it up right now. Here's our most current bar. Can you guys give me a Y if you see that the smalls are green, the large are green, and there is space between the 2? Guys, that's it. That is strong triggers. That is rule number 1 met. In the moment, bar number 1. Does that make sense, everybody? This is always what I'm looking for to start a trade, to even look for the second rule. I want to see that separation. And what's cool is sometimes you'll have awesome momentum. Sometimes you'll have weakness. You'll see the market reverse, right? Sometimes you'll have super strong momentum and the market turns anyway. And it tends to happen right at these darn lines right on your chart. Pretty amazing, right? And that's my segue to rule number 2. When you have momentum, treat it like a flow chart. If I have momentum, then I will look for a clear path. Well, guys, a clear path means that there are no termination conditions present. A termination condition is a Fibonacci-based indicator that you will know about before you ever get there. I mean, this is pretty outstanding. It's a Fibonacci-based indicator that you will see before you ever get to the area that could stop a market. And guys, this is crude oil live. And that's how many times termination conditions stop the market. So you've got to learn the recipe for what it means to have a termination condition. You've got to learn the recipe for when it's time to embrace that 90%, guys. And the large crowd, big chart, defines termination conditions. And the large crowd makes decisions, whether it's the buyers or the sellers. They make decisions very often right at these key areas. So this is what it looks like to have a termination condition. Price, these dynamic Renko bars, the large chart buyers in control, reach Fibonacci resistance. And when they do, all you have to do is ask yourself, how many trigger lines got above resistance? And does everybody see that none? Both small and large are still below that red line. Guys, that's your termination condition. And it's that easy to identify. Price comes down, sellers are in control. Price reaches Fibonacci support. It reaches those yellow 1-to-1s, areas on a large chart. None of the triggers break. Absolutely no trades into the area. This is an area that could stop the market. This is an area that could create a bounce. This is an area that could start a reversal. And it's going to look just like that in the moment, guys. Price reaches the line. None of the triggers break. Every line you reach will be a termination condition, at least for a moment. Areas do break. But if you learn the recipe for the termination, you can also learn the recipe for the break. Are there any questions, guys? Price reaches an area. None of the triggers break. So if we go back to that picture that I just took, price reaches an area, an area, an area, an area, again and again and again. This is the 90%, guys. This is the 90%. This is the sitting on your hands. But areas break. If they didn't, we'd be caught in a range forever. This will keep you patient. This will get you excited. So let's go through what it looks like to break an area. Because you've got to know the difference between rule met and rule not met. So this is what it looks like as an area breaks. And number one, notice there's a big stop sign. Price reaches support. Remember the recipe. Price reaches an area. Where are my triggers? All four triggers remain above the area of support. And because it has, my job is to wait for the reaction, to see if they're going to create a bounce, to see if there's going to be a reversal, to see if it breaks. I'll never know what the reaction is going to be, guys. I've guessed it a million times. I've guessed it right about 10% of the time. So I sit on my hands and I do nothing if I'm not already in a trade. Now, if I'm already in a trade, I might hold a contract to see if it breaks. So what I'm going to look for is my small triggers to absolutely smash below that area of support. Like, give it a bar. And if they do, with that strong trigger look, well, this area has the potential to break. But it's not broken yet, guys. And because it's not broken, it's not a clear path. This particular look is what we call a 50-50 look, guys. And this is a look that says, hey, with that strength, the area may break. It is the second trade on your plan that is dependent on you understanding when it's a termination condition. If you want the highest chance of success, you will allow 3 trigger lines to get below support. Both small and at least one of the large. That's when the breakout is more likely to occur. 2 trigger lines is not your best look. An area is considered broken and your path is considered clear when the smalls and the large, both lines of each, get below the area of support. Now the area is broken, the path is clear, and guys, the path will remain clear until you reach the next area. When you break support, it behaves as resistance. And you'll see it very often in the market where an area of support breaks. Here's a good example. And the market comes back and retests it as resistance. And you'll see these tails that do it. An area of resistance breaks and they come back and test it as support. And this is something that happens all day long. So once you have a clear path, your path is clear until you reach the next area. And once again, guys, this is crude oil. Do you see 2 triggers through the area of resistance? Only 2 triggers through the area here, and the large triggers are way down here. If you can identify this as only the potential to break, it puts you in a position to know how to manage the trade. It puts you into the position of looking at a different checklist for entry, not a high probability trend trade. Go in the other direction. There's the look right there. First, it's a termination, wait for the reaction. Then it's the potential, manage assertively. Then it's a clear path. That's your best of the best until you reach the next area. The easiest trades that you will ever take, the highest probability trades that you will ever take, the best of the best trades that you will ever take, I'm dragging my feet as I get to the picture, will be this look right here. First, it's momentum. Then it's a clear path. Does everybody see it? First, it's momentum. Then it's a clear path. Guys, these tails on your large chart, that's the small chart retracement. We don't trade the tails. We refine it, way more accuracy. But you're about to learn how to pinpoint precisely where those tails are most likely to form. This is the best of the best. This is the highest probability, guys. Once you learn this trade, it opens the doors for the rest of the trades. But more disappointing news. Not only are you not in charge, there will be times when your path isn't clear because areas are stacked. I try to be very forthcoming with all the little things that tend to piss off new users. There will be times when it's fib after fib into divergence low and you're like, son of a gun, I can't get a clear path. I'm never going to make any money. This is horrible. And then you realize that this is 90% of your day, guys. If you sit in front of your computer for 6 hours today, you're likely to be active 36 minutes. And I think that's generous. But here's the cool thing. The futures markets collectively trade about $220 billion hourly. The S&P exchanges about $174 million a day. The NASDAQ exchanges about, I think it was $269 million a day. You don't have to be in every move. You don't have to be the first one in, and you don't have to be the last one out. Because if you look at trading as a business, and a business requires consistency, if you can capture $400 a day consistently, there are 252 trading days in the average trading year. That's $100,000. There's no doubt in my mind, you spend 5 days with me, you learn this pattern, you'll see that potential instantly. The hard part about trading isn't recognizing the good stuff. It's being able to sit on your hands when it's not perfect. It's believing in your plan enough to choose to do nothing when there's nothing to do. That's what separates the pros from the wannabes. So large chart's done with us, guys. The large chart has momentum, strong trigger lines. The large chart has provided a clear path. Price has not reached an area. We've broken the previous area. It's time to go to the small chart. The language for entry, if you learn this simple phrase, it will have you calling your shots 4, 5, 6, 7 minutes before the market ever gets to your entry point. Because you're going to use a limit order to buy or sell a pullback in an area inside of triggers on your small chart. You will wait for the market with a limit order, and you will buy or sell a pullback, that little push by the small crowd. And that pullback needs to go to an area, to a fib, to a mid-band, to a yellow 1-to-1, and that area needs to be inside of the large triggers. And your small chart actually has 2 sets of large triggers. It has some smooth large triggers. These are native to your 5-1, to your small chart. And then it has these stepped large triggers. These are just the big triggers from the large chart. Price returns to triggers. It's called regression of the mean. When price breaks away from large triggers, it very often pulls right back to them. Your accuracy comes from having areas inside of that retracement zone. That's where the market is most likely to bounce and continue with large chart advantages. That's where the small crowd is most likely to fail. And guys, your entry is a pattern. It's a pattern that's repeatable, that is predictable. It's a pattern that you can prove when the large chart advantages are met, wins more than it loses. And it all begins with a reversal bar. When the rules on the large chart are met, when I have direction defined, when momentum is present, when the path is clear, your small chart is going to be flying up, guys. And this is where the fear of missing out is going to take a hold of you. This is where the fear of missing out is going to tell you, jump in, they're going without you, you're never going to get paid. And new users tend to. They finally succumb. And then the reversal bar prints, and this signals the beginning of the pullback. And guys, this is a pattern that repeats itself every day. Once the reversal bar prints, you can know exactly where the pullback is most likely to go using these large triggers. Triggers define the retracement zone, but triggers aren't bouncy. Triggers are like clouds to a skydiver. It's like walking through the fog, guys. They just tell you where the down bars are most likely to go. It's the areas within those triggers, fibs, midbands, yellow 1-to-1s. Those are like your brick wall to the tennis ball, guys, and these are where the market is most likely to bounce and continue in the direction of the trend. And sometimes there's multiples, so you might have to create a window, guys. I call it the window of opportunity. From the highest point of support inside of triggers to the lowest point of support inside of triggers, guys. This is where the high probability trend trait originates. So the small triggers, great question, Josh. And let me break it down this way. I'll take a picture. I like taking pictures. So these are the small triggers. And your charts, your large chart, just so you know the numbers, your large chart is what we call a 13-2. It describes how many ticks it takes to create a bar. And your small chart is a 5-1, and it's just a smaller, faster look. So these are your small triggers. These are native to the 5-1, to the small chart. And then the smooth large triggers right there, see them without the steps, kind of a darker green? Those are also native to the 5-1. So these are the triggers that you can use, that separation, and say, hey, I have strong triggers on my small chart. Does that make sense? Now these step triggers, they're not my real triggers. Those step triggers are from the large chart. So let's do this real quick and I'll show you exactly how it works. That's why we don't trade in determination conditions. So watch this. If I put this circle around the large triggers right there, on my small chart, you can see that that circle lines up with the synthetic triggers. And on my small chart, there's the large triggers, and they're a little bit lower. So every time you look for an entry, Josh, what you're saying is once the reversal bar prints, I know that the market is likely to retrace somewhere inside of either of those triggers. So the large and the synthetic. That's your retracement zone. And we added it from the large chart because what it does is it really increases accuracy. And where's it at right here? Whoops. So your large chart has two triggers through, all the momentum, potential to break, and on your small chart, price pulls right back to resistance right inside of that retracement zone. That's your pattern. That happened at 5:43 this morning. So what we're going to do is we're just using both sets for the accuracy. Does that help? Small triggers. Smooth ones are large, you're welcome. And then stepped ones are from that higher time frame. So price returns to triggers, that's your retracement zone. Price typically bounces off the areas inside. That's your entry. And because when there are multiples, remember that the large chart is screaming to the upside. Like the large chart is absolutely flying. There's my large chart. Haul and tail in the direction. I use a lot of pictures. We're going to get in at the high point. We're going to activate a limit order, and you're literally going to wait for the market to come to you right at that highest point of support. And if they do, you're in a trade. And if they go to your target, guess what? You're in a winning trade. But because This is where management starts. Because I know that price returns to triggers. Let me push this down. Get out of the way. Once it starts down, it may go to the top of the triggers. It may go somewhere inside of the triggers. Heck, it might even go down to the very bottom of the triggers. And as long as I'm above these small triggers here, I'm in my zone. I'm in the good stuff zone. I'm where continuation happens, and I don't panic. And I'm just like, okay, as long as I'm in that box, life is good. But if the small crowd has it in them to get beyond the areas inside of triggers, if the small crowd has it in them to blow through the retracement zone, you're actually going to wait for the market with a protective stop, and you're going to say, okay, that small crowd ate their Wheaties. They got through everything that is most likely to continue the market in the direction of the underlying trend. I choose to no longer be in that trade. And guys, anything in the world that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. And here's the sad part. You will never know which one it will be. And this is why execution of the method is so important, because if you do the same thing 100 times, you know that you're likely to win 70 to 80 of them. And you know that you're likely to lose 20 to 30 of them. And because you wait for the pullback, beginning of the reversal bar, because you know exactly where the retracement's most likely to go, and most importantly, where it's most likely to bounce, you know exactly where the market shouldn't go, guys. And initial stops, and it's in the plan that I gave you, are placed 4 to 5 ticks beyond the trigger lines, where the market shouldn't go. Any entry taken from the wrong side of the triggers beyond the advantages, guys, is more likely to lose than win. Rule number 3 is no longer in play. I see a lot of losers from beyond the triggers, because once you get beyond, you don't know if, when, or where that market's going to continue with the trend. And guys, all of that being said, to recognize a pattern. And that's all it is. It's the same thing every time. So this one I took on the 6th, 2:25 p.m., guys. First, it's momentum. Do you see that tail? First, it's momentum, potential to break. There's your pullback right to the area inside of triggers. You can go back and study this methodology historically by circling those tails when the rules are met. And if that circle lines up with areas inside of triggers, that's your pattern. Guys, that's all your pattern is. And there's about 500 of them in the client trades. I stole some, so that was on the 6th. This particular one was from 2021. You can see it down in the date stamp. First it was momentum, then it was the potential to break, and then it was a pullback to an area inside of triggers. And guys, that is 4 years ago. First it's momentum, then it's potential to break, then it's a pullback to an area inside of triggers. That's the same pattern from 2022. And if you go through and you look at that spreadsheet, guys, you're going to see, let's find one going the other direction. You're going to see the exact same thing. First it's momentum, you've got to learn it. Then it's clear path, that's imperative. Then it's a pullback to an area inside of triggers, and great things happen when that's your look. So all of you that are new, welcome to Nexgen. When you come to class tomorrow, guess what we're going to talk about for the first hour? We're going to talk about the high probability trend trade, and we're going to continue to talk about the idea that if you just learn a couple advantages, you can find the trades. And once you find the first trade, the other trades tend to jump off the table at you. Are there any questions about a high probability trend trade, guys? This classroom really is. It's created on the understanding that repetition creates recognition. If you want to get like a little jump start, go watch the videos from previous. It's an hour of the rules. You can put it on 2 times speed and just repeat it until the rules begin to stick, guys. You can go study the spreadsheet and learn these patterns. There's the entry sequences for you, step by step. One of the things that I always promise you guys is every tool that you need to be successful with the software by the time you leave my classroom. So there's everything you need for the highest probability trend trade we teach. And now we're going to talk about it on TradingView. And guys, this tends to go a little quicker because everything that you just heard starts to translate over. TradingView is a different platform. How do you access? Oh, no worries. I put them up in the chat box, Josh, but let me put them in the chat box again for you so they're right below you. Boom, 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 boom. And I will always share everything that I have. And I've got a million pictures. So right here, if you can see it, I just dropped them below us. You can download them, or you could even just click on it and drag it over to your desk. And that works as well. And I'll tell you what, since we do have so many new people, here's everything that I just talked about in a two-page document, guys. The rules, the charts, the indicators, the advantages, all of it, even the entry sequence, bar by bar, and how to study. Guys, we've taken this one thing and dropped it down into 2 pages. That's a great study tool for you as well. And now we're going to talk about TradingView. Guys, TradingView is like 90% the same, except it's a different bar structure, which requires a different read. And on TradingView, we don't have Fibonacci yet, but there's a company called Chart Prime that creates supply and demand zones. There's also free versions of it if you don't want to pay. And we're just going to treat these like fibs. These zones will be areas that can stop the market on a large chart. These will be areas to take trades from on a small chart. Other than that, divergence highs and lows, one-to-ones, mid-bands, trigger lines, it's all there. It's all familiar. But the time frame is huge. Your large chart is a 15-minute bar. That's a big bar, guys. You can get a lot done in 15 minutes. It will define direction, momentum, key targets, and terminations. But your 15-minute is so big that what I did for you guys, because again, I'm a simple kind of guy, I created these workspaces for TradingView that don't have large triggers or background colors, because I find that both of them are unimportant to see the advantages that you need. And for a lot of us, they create noise that creates conflict, guys, because if you have background colors and you stick to only trading the color, you're going to miss a lot of moves on this chart. And if you're looking at your large triggers for information, guys, it's too slow. It can't do it. So there are very simple workspaces available. They're on the plan. 15-minute is the large crowd. Direction, momentum, targets, terminations. Let them lead the way. 1 minute is your small chart. And guys, 1 minute's still a long time. Hold your breath for a minute. If you haven't done it since you're 8 like me, a minute's going to feel like a long time. It defines the immediate strength, and it defines the entry points. And this one does have small and large, because we're going to take that same concept of momentum. To read a large chart, I think it's pretty easy. It takes just a little bit of study, but direction is defined by the small triggers. You don't even have large triggers. You don't even have colors. They're either up or down. If the triggers are up, believe you're in an uptrend. Look for rules to be met for high probability trend trades long. If the triggers are down, believe you're in a downtrend. Look for rules to be met for high probability trend trades short. And then thank you, Jen. Guys, if they're flat, if they can't make the decision on up or down, look no further. I love that. Flat triggers, look no further. I can't decide what direction they want to go. I refuse to try to predict it. Jen, that is such a good picture. So up or down, pretty simple. And then we're going to define momentum by where price is, the most current price, the highlighted price, and bring this down. There's my highlighted price. This will tell me where I'm at in regards to momentum. And price will either be left of the small triggers, whether it's up or down. It'll be right of the small triggers, whether it's up or down, or it will be in the transition, inside of the triggers. And the location lets me know how I'm going to manage, guys. So if I'm left of the small triggers, I'm on the strong side of the triggers. This is the odds favorable momentum. This is the best of the best. This is where 1 minute areas are most likely to break. This is where I'm most likely to hold for bigger moves to get to large chart targets. If I'm on the right side of the triggers, this is the weak side of the triggers. This is where any area in front of me is most likely to hold and create a big ugly bounce. The weak side of the triggers, that's the same spot where reversals come from. So it doesn't mean I'm not looking for a long trade. It just means that my management's going to be really assertive. It's going to be fast. It's going to be get paid, GTFO, wait for the next trade. Now, if I'm inside, not quite strong, not quite weak, I'm going to call it the transition. Guys, and again, this is going to be the majority of your trades. Transition is where maybe I'm getting paid at the first sign of trouble, but I'm holding a contract to see if it wants to break. I'm getting to break even. I'm managing that trade not as assertively as I would from the weak side, and certainly not as loose as I would from the strong side. So when you ask yourself, where is the current price in relationship to the triggers, it's going to set you up, and you're going to know how you're going to manage that trade before you ever pull the trigger. And then finally, is there room? From the point I want to enter, do I have room to targets? Can I make some money with this trade? And if I can't, why on earth am I taking the trade? So direction, momentum, and path, guys. This is a recurring theme. This is a theme that Nexgen has been teaching for 30 years. Once the rules are met, and only if I have room to targets, I'm going to introduce you guys to the trend trade. I used to put a momentum trade in the PowerPoint here, but what I've found, just like once you find the high probability trend trade, it opens the door for more trades. So the trend trade is the first one. The momentum trade will be the one that you can recognize based on your understanding of the trend trade. 3 rules, that's it. And guys, both plans have a checklist. Print it out, put it in front of you. Grab a Sharpie. 15-minute not trading directly into areas, guys. You have to have room to targets. The most broken rule among you guys is trading into areas, hoping stuff breaks. It's the biggest producer of losers among new users and old users. Rule number 2, 1 minute, not trading directly into areas. Pretty serious about this clear path thing. And guys, it's not like areas sneak up on you. I can see those pink 1-to-1s. They're there. I'm on the strong side of the triggers, but I got nowhere to go. I wouldn't even look at the small chart. But if I do have room on both areas, I'm going to buy or sell a pullback at an area, guys. And I'm not going to do it like I do it on NinjaTrader. I'm going to wait for a pullback to an area. The moment the small triggers turn against me on the large chart, I know that it's on. I know that the retracement is coming. And I'm just going to look lower, and I'm going to force the market to go to an area, a zone, yellow 1-to-1s, a mid-band. But when it gets there, this is the difference on entry. I'm not jumping in hoping the area holds because these small triggers are against me. The immediate strength is screaming south. The trend trade entry is an up bar for a long trade that closes on what we call the correct side of the triggers, the weak side of the triggers, where reversals come from. Your trend trade entries will look the same every time. Your entry will show on the next bar because you're waiting for the close on the weak side of the triggers from an area. In a downtrend, small triggers down, we're on the strong side, there's room to trouble, and because the small triggers roll against us on the small chart, we're looking higher for a mid-band, for a zone, for 1-to-1s, not just jumping in, but rather waiting for a down bar that closes on the weak side of those small triggers. Guys, this trend trade is so easy to recognize. Your 1 minute chart has a timer. And guys, the moment the triggers roll away, I did this last night. I was watching through making pictures. This was at 21:05, and I said, oh, smalls are against me. That's where the market needs to go. That's exactly where the market went 8 seconds later. Always looking lower rather than hoping something that isn't there creates a bounce. And then when it pulls back to the areas and you get a close above, that's where your trade starts, guys. And it's the same look. It's the same pattern. It is repeatable. It is testable. And with small triggers up, now we're transition. But do you guys see how there's nowhere to go? I'm inside of a zone here. I don't have room to targets because I'm literally residing inside of a target, which means that no matter what happens over here, I'm not looking. Whoop, now we're above it. Still don't have a close above triggers. That one was half inside, but that's what your trend trade looks like. And now it's just up to the market to give us what we need to get us back to trouble. Are there any questions? It's the same thing over and over. Only 2 triggers through, not my best look, and sure enough, the market pushes down. And sometimes smalls below the large, odds favorable momentum. Sometimes the path is clear. Sometimes it pulls back to areas inside of triggers. And sometimes, guys, you're going to lose a trade that you think you should have won. Stop thinking you should win trades. Consistency of the method, guys. Even in the spreadsheet that I give you, under the patterns, even in the spreadsheet, guys, I will show you the perfect trade, and not all of them are winners, because you'll get to a point where trading isn't about winning and losing. Trading is about execution of the method, and when you stop expecting to win trades, you will typically start to win more trades because you're focused on the advantages, focused on the edge. So our large chart read currently in crude oil, the smalls are up, but the large are down, the colors don't match. I don't have momentum. And in this uptrend, price reached resistance and not one trigger broke above. I don't have a clear path. Why on earth would I go look for an area inside of triggers? Here, I have momentum. I've got 3 triggers through. The market's pulling back to areas inside of triggers. But our small chart is showing that loss of momentum. And guys, if we're relying on momentum to break areas, divergence is a loss of momentum. And when you look at your KISS plan, it reminds you, don't give up advantages, guys. It's all about having an edge. So that's my first hour. It's the same hour every day. Every day it's the same hour. And then as we get into the second hour, we are going to look at everything that you guys have presented. We will look at live trades in the market. If the rules are met for the high probability trend trades, if we can find a trade that fits the rules for the KISS plan, we'll even pull the trigger and we'll talk ourselves through it. I'm not doing that to tell you guys to enter. I'm doing it for educational purposes so you can see what it looks like when the rules are met. But I want to read this out with so many new users in the room before we take our first break. This was actually a reply to an email that I got from a wonderful human being that was really put out that people in this room weren't taking only high probability trend trades. And he really was. He was upset. He's like, how come they broke rules? How come they didn't do this? How come they didn't do that? Stay in your lane, guys. Don't be the trade police. This plan is a stepping stone in your learning journey. It's the beginning. It's the foundation. It teaches you to recognize advantages, guys. There's so much more out there. So I want to remind you, new users, that the key to everything is having a foundation. And the more work you put into your foundation, the stronger of a trader you become faster. You've got to understand the basics, and then each day and week, just grow a little bit from it. So for new users, I blanket very conservative rules, recognition of advantages, and I hand you a solid plan that optimizes your chances of success as you learn to read your indicators. So for new users, all termination conditions are bad, and no momentum is bad. And areas beyond the large triggers for entry are bad, and it feels that way. It feels like I have shackled you to this conservative approach to trading that doesn't suit your adrenaline junkie needs, guys. But these blanket rules are there because they increase the likelihood of success. And there's this old adage that confidence comes from the memory of success. And if you put yourself in a position to win more than you lose as a brand new user, the odds of you staying a day trader go up exponentially. These things are not always bad, but you have experience to know when to use exceptions. So just like anything, the more time you spend with it, the more you're going to see, and that's when the doors start to open. But you've got to learn the process that yields results, and the results seem to follow. That's where the KISS plans come in, guys. If you keep it that basic, if you follow simple rules, if you're okay not looking for all the trades, only the best trades, you can find an extraordinary level of success. And I have watched it repeatedly over the years. And the further new users deviate from simple, the longer they take to learn how to be comfortable with pattern recognition. I'm going to tell you guys right now, I've never had anybody in the history of this checklist for entry, never had anybody present to me and say, Mark, I've done worse than 70%. Most of you find yourself in the 80s. I'd rather you believe it's 70 and just be happy, right? Question everything. So this is for all of you. Josh, don't let me get away with saying something that you don't understand. Alex, PSP, Tiger Roy, Justin, guys, this is your room. And if I say something that doesn't make sense, just say, hey, that didn't make sense, and you will get clarity, I promise. But what I want you guys to do, one, I don't want you to shy away from posting in my room ASAP, but when you do, if you're on NinjaTrader, the one thing that I ask is that you identify through annotation, momentum, path, and entry. Because my job is to teach you guys to read indicators. So I want you to tell me how you read your indicators. And very often, a new user in the moment may believe they took the perfect trade and they may miss out on something. And it gives me the opportunity to make sure that your chart read is accurate, guys. So we'll walk away from every post, celebrating every victory that I can find. I'm a warm, fuzzy kind of guy. But more importantly, identifying challenges that may be costing you. And when it's right, and when we get to high five, you have literally written your recipe to make the trade repeatable. You have written exactly what the looks mean to you and how you're going to turn those into a trade. Or you've identified challenges that you didn't realize were there. Annotation, guys, the more pictures you take, the more charts you annotate, the faster you're going to get to where you want to be. So if you're on TradingView, I ask you to do the same thing, guys. Momentum, path, entry. Tell me what you see. It's for you. It's not for me. I can look at your charts and know exactly what you did and probably exactly what you were thinking. It's for you, guys. And the people that take the most pictures get to where they want to be the fastest. And I like to share my picture count with you guys. 17,708 pictures. There's a reason I can look at a chart and in a fraction of a second say I don't have momentum or a clear path. I choose not to look for an entry. Whoop, that's my untitled one. Let's go to the next workspace. Smalls are above the large, not below the large. I don't have momentum. I don't have entry. I'm just not looking. So if you're in my room and you're one of my older people that are wondering why the hell I can't find success, start following the plan, guys. We give you everything that you need. Everything. Rules, feedback, coaching. It's up to you to get the work done. That's the only part I can't give you, guys. I can't give you the desire to succeed. And that success comes from your study, from your participation, from using the spreadsheet. So with that said, I'm going to go stretch my legs. I'm going to go high five my wife, and when I come back, we're going to look at all the pictures that you guys have posted. We're going to talk about momentum, path, and entry. We're going to high five. We're going to correct, and if the rules are met, maybe we'll pull the trigger this morning. So go stretch your legs, guys. I'll see you in about 5 minutes. The second third, not really the second half. Smalls are still above the large. Price reaches a divergence low. None of the triggers have broken. That's a termination condition. I don't have momentum. You guys want to see something cool? So when I talk about the market seems to do the same thing over and over, pivot, back to the mid band, back to support, all the way back down to the pivot with weak triggers. This is a pattern, and it's cool because I recognize it from our termination condition section. And here it comes. And if you go to the trading guide, guys, everything that I just talked about is right in here for you. But if you look at termination conditions, one of the things that you're going to see is darn near that same look. There's divergence, and then it comes up, hits that midband, comes back down, weak triggers, catches that divergence low, and then it starts back up. And guys, you can look at that and you can say, man, that's one of the possibilities. That's a pattern that repeats itself. I'm going to choose not to take this trade into it. I'll wait for it to break. I'll force it to give me exactly what I need rather than just going, man, I'll take what it gives me and hope I can get paid. So I'm going to go through and I'm going to click all of the pictures that have been posted. Guys, remember, I'm not the trade police. I don't want to be the trade police. That's a lot of pressure on me. So what I'm going to do is I'm just going to look at your charts and I'm going to talk about momentum and we're going to talk about the path and we're going to look at it and just celebrate victories and take some lessons out of it, guys. So I always open up all of the ones that are presented so that I can get back down to the chat box. If you are new to the room and you're looking at someone's chart and you're like, man, I just don't even get that, throw it in the room. Talk about it, guys. If you post in my room, your chart is open season. I can take it. I can turn it into lessons. I like to take them and put them into highlight reels for YouTube, but let's take a look. Traded into outer bands. So identifying the challenge before even discussing the result. 15 minute, 1 minute, saw them, exited. There was a divergence on the 1 minute, it disappeared, minus 190. So outer bands are termination conditions. Outer bands are points of exhaustion. Outer bands should not be traded into. And if you trade into them, very often you're going to lose. And that's exactly what happened. Just no room. No room to targets, guys. You're going to see this as a recurring theme in the room, not because people enjoy doing it, but because that's the one that forces you into patience. Waiting for areas to break and not just peek their heads over. And I want you guys to see this. Peek ahead over, peek ahead over. You can't consider that a break, guys. If you want an area to be considered broken, your price has to get away from it and pull back to it. That's what a break looks like. So 15 minute up, strong side, clear path, beautiful large chart read. 1 minute closes above the small triggers. Where's your entry? There it is right there. Did not divide contracts. Zone was not there when I entered. That happens sometimes. Looks good. Just luck. Outlier would have paid well. So the same trade, but now you're above the outer band. All your indicators are going up. You had a close on the correct side of the triggers. And even if that zone was there, Paul, you had more than enough room to get there. That's a good looking trade. Momentum and path. Once you understand those two concepts, guys, everything else seems to just kind of work its way out. Here's the idea of peaking above. 15 minute up, it's on the weak side, clear path, and when you get here, it's bringing up crude oil, E. Webster. I'll be right there. There's your pullback, Paul. There's your close above. And this is one of those times where you're one tick above the zone, and honestly, it's not a bad look. It didn't go. It didn't go. And sometimes good looking trades don't go. E. Webster, I apologize. So, guys, when these links are attached to mine, so let me do this. Let me go save. And let me copy the link. And then Webster, Eric, there's the page. But guys, if you open it up, they should be the same. You can always just change the symbol. So like I could take the crude oil one, and if I wanted to, I could just turn it into NASDAQ. And then suddenly it's a NASDAQ chart. So I could have crude oil here. All I have to do is turn it into NASDAQ. And now I've got a NASDAQ chart that looks just like this NASDAQ chart. I'll just close it and I won't save it, and then we'll be good. Any way to cut down on losses? Well, your stop is below the pivot low, Paul. Your large chart is up. You entered at 41. Everything was clear. It's from the weak side. No, I don't see any way to... Your risk is in the right spot, below the pivot low. It just didn't work. The only way that you can minimize losses would be to put your stop in a spot that could get hit and then watch the market run. So 370, two contract, that's 100 and... That's math. 185 each. Sometimes that's just what it is. It's not a bad looking trade. Sometimes they just don't work. There's the exact same look. Is that the same one? That's the same one, isn't it? And then it comes back to the mid-band. There's your up bar that closes above. You wait to get above the zone. Starts to go. And I love this hold. So, Paul, when it pulls back, that's your new trade, right? You're like, whoa, all the rules are met for a trade here. And you hold your stop. And it does everything that you would expect a trend trade to do. I like it. It goes right where it's supposed to go. Nicely done. And when everything is doing exactly what it's supposed to be doing, yeah, you're good. Nice trade. Nice trend trade. All right. Stopped out of a long, then caught a runner short. Weak top, triggers rolled down, separated, odds favorable, clear path, and just hooked it in. Bad entry, stopped when the market reversed. And guys, two triggers through and divergence. That is a recipe for disaster on those trades. One of the things, though, and I'm going to say this out loud, is Pete's been with us for about 10 years. Pete has put in so much time and invested so much, hey, Wayne, into recognizing patterns that he's learned when to make a few exceptions. But divergence, for you new users, divergence, when it's only two triggers through, is the biggest killer of that trade, 100%. Pete says, I'm going to give it a shot, and when it fails, he goes, okay, I can't go long anymore. With all this momentum, I'm going to get below trouble, and I'm just going to ride momentum down. And what a great recovery. Back in a different lifetime, I used to race motorcycles, and there was a novice class and an expert class. And I had an expert tell me when I was still a novice, he goes, the difference between a novice and an expert isn't how fast you go very often. It's how quickly you recover when things go wrong. And Pete, that's what puts you in expert status. You don't take the next 20 minutes upset about a loss. You say, let me reread my indicators, look for opportunity, and capitalize. And you did a great job on it. And guys, when you start getting good with the software, you begin to realize that if every rule says don't go long, your brain will shift to looking the other direction and find opportunity. Everything is going, life is good, he's above all the trouble, and he just jumps in, gets paid, gets out, guys. JTFI, jump the fudge in. There's a lot of those trades that I see in this room. And guys, they've got to be rooted in momentum and nothing in the way to have the highest chance of success. But when they are, there it is again. That's 3 for 3, Pete. Just making money off momentum and path. When I tell you guys, learn it, it'll change your life. I mean it. Learn momentum and path. All right, back to TradingView. Let's see what we have here. 15's down. It is on the strong side. There is a clear path. There's your close below right there, Paul. There's your pullback. And this is an interesting look. So I want to talk about a little bit on this look, Paul. Just on the entry chart. And this isn't a rule, but I want you guys to think, why do I wait for a close on the weak side? So the rules say close on weak side, so you are not fighting the immediate momentum on the small chart. So that's the basis for the rule, guys, is price pulls back, and I'm waiting for that close on the correct side of the triggers because I don't want to fight these triggers. Does that make sense, everybody? If you're with TradingView, we may change your life here over the next moment or two. That's the only reason we wait for that entry, because I don't want to fight that momentum. Well, guys, if this is my trend trade, and Paul, I've done a little bit of study on this. That's my pivot high, right? Here my triggers have rolled. They're down, they're down, they're down. Do I really have to wait? If the expectation is for this trend trade to go to the next zone, once the triggers are down and we pull back, if they're already down, I'm not fighting them if I take an entry. I'm not fighting those down triggers. They're already down. And then when it does come back up, that's where it's wrong. But I think a lot of times, this is kind of like the second leg of a trend trade, but everything is in there. So I think if you get in the mindset, okay, this was my pivot high, this is the trend trade doing what the trend trade wants to do, here's my down triggers, maybe you just try to get a better price right up at that area. And I think I've got one in the trading journal. Continuation style entry long, because this is something that I'm trying to study. I'm always trying to get better. Open the link. Well, that one's just not going to open for me, is it? Well, oh, there we go. Is that going to do it? Nope. That was just a regular entry. I really want to get this lesson because I think it's a good lesson. I don't know. The idea that you can, when the triggers are going your way, you're not fighting them, I guess is what I'm trying to say here. So once these go down, any bar that you enter on with them down is just a continuation of the trend trade. In the same fashion that here's your first entry, right? But once they're going in the direction, it could be this entry, you could get in there, because your stop is below the pivot. Any bar is acceptable after the rules have been met for the trend trade. And the further it goes, the more risk you have. But sometimes you'll see it punch up and pull back, and you can look for a better entry. Did that make sense, Paul? And again, everything says down, and I think that the biggest challenge with this trade wasn't anything that you did. It was Monday morning at 6 a.m. and they're jockeying for position, and they just didn't want to do what the indicator said they wanted to do. And guys, I'm telling you, Monday morning, you've got 8 hours a day for 5 days. You've got 40 hours to find your money for the week. You don't have to make it all. You don't have to make it all in the first hour you wake up on Monday because you're excited to trade. 15-minute down, strong side clear, 1 minute close below the small triggers, out of trouble. I like it, great trade. And then that's where it started to get into that consolidation. Nicely done, Paul. Another one. 15-minute up, strong side, it pulls back. There's your close above, around 38, but there's no room. So you get in above trouble and out of trouble. And then, Paul, this would be one of those ones again where you're already in, right? I like it, though. You let the bar close above, you get in with all the advantages, your stop's in a good spot, and it goes right where it's supposed to go. Momentum and path once again. And then we saw that one. Flat triggers, no trade. And then Wayne, no man's land. Flat triggers, nothing to do. Bounce off, sit and wait. And then you guys want to see something funny? Wayne, you're going to get me for this. Are you ready? No man's land. Flat triggers, nothing to bounce off of. Sit and wait. Man, I was just kidding. Let's go long. That's how quickly your brain will change. Wayne recognized that everything was up and screaming. He's like, wait a minute, once all my indicators agree, it's more likely to go up. And Wayne, I liked it, but it made me laugh because right here you said there's nothing to do, right? They were sideways, they were flat, one was up, one was down. And then here, now the smalls are breaking above, and now they're heading that direction, and you've got room to trouble, you're not at trouble. And it's comical if you don't really do the chart read, but when you do the chart read, a lot changed for Wayne here. The sellers tried to push down. They couldn't do it. The small triggers got above the large triggers. The large triggers started a pinch and roll. Wayne had room to trouble. So what Wayne did is he waited out the nonsense where there wasn't room, where they're running the edge, where the smalls and large don't even agree with each other. And he said, all right, but when everything says up with my large chart, we're going to giddy up. And I love the way you did it. But when I was reading it this morning, I was like, all right, it's funny how quick it can change. But it changed based on recognition of advantages. This wasn't Wayne jumping in because he got bored. Well, F it, I'm going to take the trade anyway. Bar closed above the triggers, above the one-to-ones, room to targets, trailing stops. I mean, you've got it all planned out. And guys, when you have a plan, you don't get into a trade saying, I sure hope this works. You say, now my rules are met and I have an edge. And that's what we do in this room, guys, is we teach you to recognize an edge. And then you get to all the trouble. Shenanigans, no trade. There's just nothing to do. There's nowhere to go. Nowhere to go. Why try? Here we go. Another one of my silly pictures. Guys, when you see stuff in front of you, that's your termination condition. No matter how much momentum you have, no matter how excited you are to get to the other side, it's more likely to stop you than it isn't. Great trading, Wayne. All right, Miss Jen. Upon entry, no momentum. Where did you enter? 44? So you got in right here. And you get in at a pullback to an area inside of triggers, and you wait for confirmation, and you get paid at the first sign of trouble because it's not high probability, and then you take the second one off at the large chart target that stops the market instantly. How brilliant does her exit look, ladies and gentlemen? If you're new and you're wondering where you're headed, this is it. You will know where the market is most likely to continue. You will know where the market is most likely to go. And that same concept lets you know where the market is most likely to stop. And she got paid 5 ticks from the top of the move because her large chart said that's the end of the road. Nicely done, Jen. Whoa. Indicators up. They are. Smalls are on the wrong side of the large. I disagree. They're up. There's your pullback to the area. There's your close above. There's out at trouble. I like it. Nice trade, Andy. And Andy, there's a lot of information on this chart that you just don't need. It's up to you to decide whether or not you want it. But by trading with the small triggers, these large triggers, I mean, look, it went green background, probably good shorts, right? Red background, beautiful longs. Those large triggers, guys, if you're prone to opinions, they will create opinions for you. Nicely done. Look at that. They still haven't broken through the trouble, have they? Still haven't broken through the exact same pattern that we pulled out of the user guide. Stop the market exactly like it did in the user guide. From what year was that? Are you guys starting to believe that patterns are what we do? I always thought it was wanting to win. I want to win. And because I want to win, I'm going to trade my opinions. Isn't that crazy? But look at it. Same thing. First, it's strong triggers, reverses, pulls back, weak triggers at a divergence low, and it can't go anywhere. You're right. No momentum. No clear path. But boy, look how pretty that small chart entry is. The siren song, luring sailors to the rocks. All right, Pete, weak top, triggers rolled, all the momentum. And Pete, you had momentum on your entry. Virtual high five. And guys, here's the cool thing. I did, Wayne. You only had 3. You had the don't do anything, you had the shenanigans, and then you had the long that you took. That's all I had posted from the beginning of the day. Let me show you guys something cool that Pete recognizes. If there's something else I need to go over, if you posted over the weekend, I don't typically hunt the weekends. You're welcome to repost them. But if I start going too far back, you had that one loaded. You didn't post all those, silly. How would I know? Guys, momentum and path. If this jump in trade fails with that look, Pete knows it becomes a trend trade, which is why he holds and he gets paid. Nicely done. When your momentum trades die, guys, if the large chart's right, they typically turn into trend trades. There it is again. If your momentum trade, there's your trend trade. Jumps in with momentum and path. Perfect, Pete. Strong trending market, nothing in the way. Jump in, jump out, make money, rinse and repeat. Let's do the same darn thing over and over. I will look for your questions, I promise. That's all right. I don't mind. Guys, Wayne holds the record for most charts in a room. 77 in one day. Do you guys know how many I looked at, though, of that 77? Because that's a lot. What a pain in the butt, right? We talked about all 77, guys. Happily. Because Wayne said, Mark, I'm serious. I want to be a day trader. Answer every question I have. That's what we pay you for. And I said, you're darn right, Wayne. Let's do it. That was such an awesome day. I still talk about it. All the momentum. 3 triggers through. Pull back to the area inside of triggers. Straight up to trouble. Outstanding, Boaz. Outstanding. Rinse and repeat, guys. Same thing every day. Same thing every day. Momentum and path, find an entry. Momentum and path, find an entry. Momentum and path, find an entry. Did I mention momentum and path? Find an entry. That's all we do. Stop overcomplicating it. All right, let's see what we have. Trend is down. Strong side of the triggers. In below trouble. You take the close below, I'm assuming, and a little late. I'm not sure what I'm looking at here because I see you right at a stop loss, Wayne. Then this bar closes on correct side of rolling triggers. So you go, okay, so there's your short here. It's not all this. Sorry, I got you now. I'm there now. It took me a second. So triggers down, strong side of the triggers, room to trouble, pull back to the area, close on the correct side, and now you're in, and that's your trend trade. The only thing I could say about this, and we'll see what happened to it, is that they've already been where they were going. That would be my only, I've got to keep my eyes open because they've already reached where you're hoping they go. So when I have that already, I get my management hat on a little tighter. And you did. It's absolutely beautiful. And you're getting paid at the first sign of trouble, which is perfect. You're not keeping any risk on the trade. You're giving it an opportunity. And then right at trouble, trailing stop placed behind the back of the previous bar, stopped out, 280 total. Absolutely perfect. And then Wayne, do you see how since it had already been there? Look at the difference in the triggers. You take the perfect entry, and then when you get to trouble, your smalls aren't continuing. Your large didn't go back. I mean, beautiful management on this trade. And I think that was the key right there. Even though you are on the strong side, but because we've already been there, your management is outstanding. Did all that make sense? I didn't really see a question in there because you did it perfect. Awesome. So here we go. Strong side, room to trouble. This bar cleared the zone. And man, your trade was all the way down here. Oh, it wasn't because you wanted to get above. So you're saying, okay, with all the momentum, I'm going to get above my large chart trouble, and I'm just going to jump the fudge in. Fair? It's not a trend trade. It's not a momentum trade. It's just everything's going up strong. I'm going to jump in and hope that that wave continues, which I love. And it does. Look at the momentum. Strong side. From a termination. Room to trouble. Missed target 2 by 2 ticks. We'll see what happened. Yeah, so it's just all you're doing is jumping in. You're saying, man, I sure hope it goes. But you gave it the best conditions to do it. But your triggers weren't up yet. They couldn't have been in that moment. Not quite. Nicely done. And it missed it by 2 ticks, you said. 91.6. Just barely missed that 1-to-1, or got right to the bottom of it. Good stuff. Momentum and path on that one. Jump in. And it did everything it was supposed to do, right? You get in. You get out of trouble. I mean, my goodness. That's a great trade. That's a $1,200 trade based on momentum and path, Wayne. Outstanding. Entry point read based on uptrend on large from bar ending above large zone. All right, I'm not sure what that means. So where did you get in? And this is so Wayne, is this this is what happened, therefore I'm going to say this is what I would have done, or is this rules met? Because 67 is down here. I don't think either of them. Your triggers are down. From 67, you're on the strong side of down triggers. You've got no room to a VWAP. I would say that your best entry is going and making a sandwich. Everything on your large chart is screaming south. There's no room. 68.6 right here, that's a VWAP. You're trading directly into a VWAP from the strong side of down triggers coming from a termination. How am I supposed to look at the time? 6:45. So 6:45 is right here. This is a 15-minute bar. But look at the price. So you're saying look at the bar, but look at the price. The price is 68, 67. The price is down here. You're trying to line up two completely different time frames. The price where you said you were going to enter, Wayne, is down here. 67 and change. So no matter where that line on the bar is, look at where price was. Does that make sense? I can't find a single advantage, and it went up, right? Now, if you had from the termination, get above the termination, there's a momentum trade right there off the 1-to-1s. I would say that's your best entry because now you're at least above trouble coming from the termination. But this is the let me see what happened and let me orchestrate how I would have made it happen for me. But you can't find any rules. I know your plan well enough to know that you don't even have rules on that one. Does that make sense? That is on the next. What does that mean? That is on the next bar. 74. So here, watch this, Wayne. Let me show you something. The first break above trouble is 74. 74 is right here. That's your first break above trouble. No, you didn't, because there's your dashed line right there. I see it. I see your dashed line. Do you see it? That's where you said you traded. Dude, it doesn't matter. Your dashed lines line up. That's your dashed line on the large chart. That's exactly where price is on the small chart. There's no two ways about it. Like there is no what I believed happened and what actually happened, right? Look at my line. I'm going to leave it there. There's the line. There's the line. It's the same line. So there's the line. There's the line. There's all your entries before the line. Nothing but respect for you, but they don't line up. Does that make sense? Look at it. There's 645 right there. There's your line. There's the exact same price or the exact same everything, 645. Your entries are 10, 13 minutes earlier. But it doesn't matter. This is a 15-minute bar, Wayne. So, look, I see what you're saying. I want you to see something. Can we agree that this is a 15-minute bar right here? At 9:30 a.m. Now I want you to see something. Just because I put the line on the 15-minute bar, all of this happens in that bar. There's so much. That bar goes from 34.50 all the way down to 13.50. That is a 29-point bar, which means there's 29 points of movement over here. So depending, and it looks like it was moving up. At the top of the bar is up here. At the bottom of the bar is all the way down there. So just because it's, so you got to look at things like price because it's a 15-minute gap. Does that make sense? That's the whole bar. A lot of things can happen. Whoops, I didn't mean to close that. So the bottom of that bar is probably somewhere right around here, 72, 72. I hope that all makes sense, Wayne. So I don't see an entry. Cool. That's one of the things about the 15-minute bars, Wayne, that I had trouble when I was beginning to study it, is so much can happen inside of one of those bars that I was messing things up a little bit. Boaz, those are small swing 1-to-1s. They're the same as the yellow, taking from smaller movements. Large triggers down, but closing. So I see triggers up. Large triggers down and closing above. I see triggers up. I haven't seen triggers down for a while. 2 bars previous, Wayne. I don't know. I like the up, pull back to a mid-band, close on the correct side, stop doesn't get hit, out of trouble. So from where we're looking, everything is up, strong side. If you're above 74, you're above trouble. And it's just a trend trade. Nicely done there. Just a trend trade. This is where historical creates challenges. Divergence with weak triggers, no trade, no room, large triggers down at 745. Are we talking about the small chart large triggers, Wayne? Because everything says up on the 15 with space from 74 to 84, 10 points, which means that you got to wait for it to get above trouble and then looking for a pullback. Okay, the small large. So you've got rules I don't know about. I don't care if these large triggers are down. Following the large triggers on the small triggers on the large chart. This is why, guys, take the time for me. Do me the favor. On your large chart, up, strong, room, answer those questions. Because I can't use this to make a decision. So when you tell me bar closes above zone and triggers, but directly into 1-to-1s, right? But what's the price? The price is 76 and change. 76 and change. So it's strong. It's up. It has room. That's probably your close above. Stop below. Out at trouble. Beautiful. And then when it pulls back and closes above, there it is again. Closes above. Triggers and 1-to-1s down here. No room at entry. And then here there's really no room either. And sure enough, it creates a bounce down. So yeah, I like it. Just trying to take little snippets in between zones. But it's all predicated on up and strong with room. And I think that's what pays dividends. But the same thing, everything up, strong, and room. No room on the entry. Let it clear. Get in. Odds favorable. Up to trouble. It's beautiful. I love it. Up, strong, and room led the way on those. And then everything closes above. Everything rolls. So, okay. Now we've got something we can work with here, Wayne. Closes above, but triggers not rolled. That's the perfect trend trade entry. Why? And this is where your rules may differ from what I teach. The smalls are up. You're on the strong side, I believe. And there's room to targets, right? Can we agree that the large chart is perfect for a trend trade? So what do the rules on the trend trade say? The rules on the trend trade, let's just do language. The rules on the trend trade say, and I'm going to draw an arrow right here. Let me make it so that it's visible. The rules say, as soon as my small triggers roll down, I must look for a lower area for my trend trade. So that's the first step. When price reaches that area, entry is a close on the correct side of the smalls. And that is as limited as the language is. It's a close on the correct side of the smalls. So most of the time, Wayne, they're not going to roll. Because what we're doing is we're getting to the weak side, because the weak side is where reversals come from. Who cares? So this goes back to the first lesson. Hold on, let me go back. I love this. And this is why the trend trade, why the entry is so important to learn that process, because we enter on the weak side of the triggers, and the weak side of the triggers are where reversals come from. And what we're really looking for is a small chart reversal. So if you look at the large charts, let's see what we have here. From the weak side, that's where reversals are most likely. And when the triggers go down, they don't go back up until you get to the good side. And when price is going up, it doesn't seem to go down until you get to the weak side. So the idea is that for a trend trade, your large chart has everything that you need to go up. This is just getting to the side of the triggers where reversals come from. Does that make sense? And you're not gonna get these things to roll very often, because if it's the right trade, man, it does exactly what you see right there. It typically zings off into the distance. That's awesome. We may have just opened up a big door for you. Guys, that's why we post in the room. But that was the perfect entry. And from 77, you had 3 points to get to trouble from the strong side of the triggers. You are paid and break even as that thing runs. Nicely done, Wayne. All right, large chart zone. Okay, so there's the zone. Not getting in on the bar in the zone. I like it. There's the one that breaks ahead, but there's no room to the outer band. And sure enough, the outer band holds. Just nothing to do. That's a nothing to do trade. And then it does pull back. And then it does close above right there. And Wayne, I know you like that entry. That might have been a shot to get up to 92. And it looks like it made it. But I like that. That's great patience. There's so many trades in a day. You don't have to trade into areas. All right. This bar would have had you in 39.86 with less risk and confirmation. I think that's the one we just talked about. And it went all the way up, right? You had room. Trailing stops, make a little money. So exactly what we talked about is exactly what you pointed out on the next one. Nicely done. Nicely done. Thinking in terms of advantages. Summary of all rules met. Trades in this area. 2 contracts, 100% winners, 356, 35.60 for 3 hours of trading. Nicely done. And every trade that you took, Wayne, was long. Every trade that you took went with the large chart. Except the one. These down here where you're aggressive in at the bottoms. No heartburn. You don't really need it, do you? But this is such a great example. You can trade with the trend all day long. And it's pretty easy. And Wayne, by recognizing where trouble is, waiting to clear it, with all the momentum, you really made it look pretty easy. Triggers are up. Strong side, room to trouble. It goes sideways at a zone, and you take the long, and then it's not quite there yet, but you know where your stop goes, and off it goes. Look at that one. Nicely done, Wayne. A lot of good stuff in there. The only one that I think had any challenges for me mentally was this one here, but that was a good lesson on lining up the charts. I mean, great trading. Wayne, you have probably put 2,000 pictures in this room, easily. There's a reason you're so good at reading your charts. There's a reason you're confident in the moves. And there's a reason that you see the trades outside of the trades. It's because you're in tune, man. I appreciate the time you take to post in the room. I really do. I'm not just saying that. You get me thinking. All right. Strong triggers, long. Price pulls back. There's an entry on the correct side of the small triggers. It is into a zone. You make a couple ticks, and then you re-enter because now you're not fighting triggers at all, and take it up to the next zone. Nice job, Andy man. And it's all up, strong path. Pull back to the area, close on the correct side. You got a little happy feet in there, but you just add it in, right? Gonna get in. I'm gonna make $60. Moved it to break even too soon, but good job getting back in and letting the trade do everything that your indicator said it was gonna do. Nicely done. Uh-oh. There we go. All right. Smalls are up, strong side, above trouble, closed on the correct side, directly into a zone, 100%, nowhere to go, and it didn't go. And got your stop immediately. So Pablo, give me a Y, please, if you see that you traded directly into something that could stop the market. Rule number 2. Guys, without a clear path, you're more likely to get shellacked than not. Avoidable mistakes, and then check it out. Then it comes back, closes on the correct side with some room to trouble, and I'll be darned, you make the money, Pablo. Nicely done. And what a great... had a dose of opium. Yeah, we've all had it. But what a great example. Directly into an area doesn't work out. They just wanted to go lower. And then you get in on the right side. And I like that entry too. The triggers are already up. You've already had a close and you said, let me get above that little bit of trouble. It still gives me room. Great job, Pablo. The first one, guys, what you're going to find is that there are ways to avoid losers. And we all have things. That was my thing too, which is, it took me a while to get through it. Great trading, Pablo. Large chart leads the way. You're going to find a way. You're going to find a way. All right. Whoops. Try and go in order here. Boaz. I always joke with Boaz. He's the most boring trader in here. Everything is momentum and at least 3 triggers. Pull back to the area inside of triggers. You're a little late. You waited for the down bar. And just money. Great job, Boaz. Large chart says down. Nothing but down. Always down. Pull back to the area. You wait for confirmation. And you make the money. All right. E. Webster. Price well below triggers, so looking down. All right. You made up a rule. I like it. Close below triggers, out quickly at the 1-to-1s. I like this. Do I teach it? I don't, but let me show you something. And E. Webster, I dig it. When you are on the weak side of triggers, this is where the 1 minute has trouble going up if it's not clear. So Eric reverse engineered it. If I have strong triggers down when my large chart is in a position of weakness, I'll ride that momentum. Sound about right, E. Webster? This says probably no more longs. I'm just going to get in before trouble, get out at trouble, get in after trouble, get out at trouble. That's a solid plan. I don't teach it. But E. Webster understands momentum, understands path. Good job. Now here's the fun one. You know, Mark, I don't want to talk about this one, and I don't want to talk about this one, Not interested in talking about that one. Not even that one. But look at the winners I took. So, guys, you're not obligated to share anything with me. But E. Webster, at the risk of alienating you, and I don't mean to, making mistakes is better than faking perfection, guys. There's nothing I can teach here. It's odds favorable momentum, nothing in the way. Kick ass. You made money. That's the easy way to do it, right? What happened here? Why'd you get stopped out of that long? At 31.50, trading directly into an outer band, right? From 27.75. What went wrong? And guys, if you share those and you say, hey, Mark, every now and then I'm making mistakes. Help me fix them. I will. You don't have to. Miss Jen, strong trending market. Absolutely nothing in the way. Jump. Oh, that's the perfect momentum trade. Slap off of the fibs and money and money. Beautiful trade. Momentum and path, my friends. Have I mentioned that yet today? Momentum and path. Momentum and path. Everything says up. I think we saw this one, didn't we? Wayne, we saw this one. You waited for everything to agree, jumped in, got out of trouble. Yeah, for sure we saw that one. And we saw that one as well. Good stuff. Pete, same as Jen. Everything's going down with nothing in the way. Let's jump in and go down with it. I mean, my goodness. How do you go wrong with that? Did you have a question on either of these, Wayne? Nothing to do. And then that's the one where 2 minutes earlier you said can't do anything. And then it all agreed. And you're like, well, now we can. And I love that one. Great trade. And then, guys, once again, when you have momentum and there's nothing in the way, you will find a way to make money, it seems. All right, Miss Trina. This entry was a mistake. Hit buy instead of sell. I've done that. All right, thought triggers were turning up, but not fully turned. The old head fake, right? Pulls back, get a close above. Buy here and lost big. Why? Because it's going down. Because it's all going down. And it's that little safeguard. Did you see Jen's picture this morning, Trina? I want to show you this one. Because it was a good picture. But what it was, let me see if I can find it. There it is. If you're not sure if it's up or down, if it looks like it could be either, it means that they're not sure. So if they're flat, if they're rolling, they just don't know what they want to do. So here you're like, well, yeah, it could go up, but it could go down. Do you see it? Thought the triggers were turning up, and what happens, and this is kind of the pain in the butt of the 15-minute, Trina, is you saw these triggers going up and down, right? Wavering back and forth. Because when they turn until the bar closes, you're going to see both sides of it. So if they were actually up, makes all the sense in the world. But if that market goes down, they'll never even show up. And I think that's what happened. This is one of those times right in this period here, I'll force the 15-minute bar to close and tell me which direction they're really going to go. That might be helpful. Like here, it's just definitely down. See if we can find an example of it. There we go. And that's it right there, right? So they're like, they could go up, and eventually it looks like they did. And now they're flat again. And if this bounces up, those will end up. And if they continue down, then they'll be down. It all depends on where this bar finishes. And we have 12 minutes to figure it out. I know, right? That's when those 15-minute bars mess with you because you're like, I want to be in a trade. If they were up, though, It makes perfect sense. Now it closes. Now they've turned up. There's your pullback. Close above, directly into trouble. Nope, you entered after trouble. Nicely done. And it goes up, 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 and then all the way down, and you get out break even, it looks like. Stop 3, 99.1. Okay, so you moved your stop after that 199. No, so you made some money on that one. Nicely done. 130. 130 4 times over is a great living. Nicely done. Victor, you just blew your 50 account by forgetting to remove your second profit target, walking away from the computer, hit it. Yep, I've done that one. I've done that one, guys. Hanging orders. Hanging orders. Make sure you don't have any. And I think there's a way, if you're going to walk away, you can go to orders and see if there's any working if you want to get into that second check. Most of us do that at least once. I know I have. Probably more than once. I'm not proud of it, but it is what it is. Good second hour. Well, he wasn't in a trade yet, Wayne, so he actually had an order that was waiting off screen that he couldn't see. Yeah, positions too is a good thing to check. I've done that before. I've done that a couple times. Especially, and guys, Nexgen Pro Trader Funding is so much better because when you enter a market on Nexgen Pro Trader Funding, you get stop losses and targets to put in. But if you're on some other Trade-of-8, you've got to put in limit orders for your targets, and you've got to adjust them and going through. Yeah, the Ninja Trader does have a good ATM. There's no doubt about it. There is no doubt about it. But Nexgen Pro Trader Funding is the best in the business that I've seen so far. So it takes a little. Are you comfortable taking partials? I know you're doing Pro Trader Funding. I think so. If you're in multiples, no, it's Trading View. So you could put your target way off in the distance and put your stop. All you have to do is reduce contracts, right click. And the cool thing about this, and this is how it is on funding, is if it takes your first target, it'll automatically adjust everything else. So if I buy 2 more, it'll automatically adjust everything else. If you are using Trade-of-8 with another company, it'll leave those orders hanging. That's what Trade-of-8 does not do, and that's when orders stick around. And guys, that's why. So John Novak made a lookalike. Yeah, I've got a lookalike. Ninja Trader, stops and targets. It's not going to work for funding. But if you're one of those users that uses Trade-of-8, with a funding company that isn't Nexgen Pro Trader, and you want a Ninja Trader setup for it, it'll have fibs, not zones. But I made the lookalike. You guys are welcome to it. I'll always share. And I don't believe one's better than the other. They're just different. They're just different. Is what it is. It's still all path, right? Smalls are down. Strong side of the smalls. If it keeps pulling up, I'll have room to trouble. Because the small trigger's rolled, I have to pull up to an area and wait for a close on the correct side. That's my option right now. That's it. I know it because I know my plan, because I know my rules. Once you know your rules, guys, you will call your shots. There's no doubt in my mind. All right, that takes a second to load. That market flow on the 1 minute takes a minute. I guess we can see if they get there. But that's all of our pictures for a moment. I'll leave you guys with TradingView for a minute. We'll see if they make it to a mid-band. Stretch your legs. Guys, if you're new, ask some questions. Post some pictures. Let me know what I can do for you. For those of you that are using Nexgen Pro Trader funding, guys, the plan that I give out every day, the KISS plan, is designed to help you guys pass your evaluations, to keep you on the right side of things, to keep you focused on the best of the best. So I'll be back in 5. I'll let you guys watch the NASDAQ here on TradingView. Post them if you got them, guys. Last hour. Paul, you're struggling with replay, huh? So let's click replay. We'll go all charts. I'm going to start a new one, and I'm going to do a date. So let's just see what we can see. And guys, remember, Paul, just because you think it should work a certain way doesn't necessarily mean that that's how it's going to work, unfortunately. So here's my replay. And I don't seem to have any zones. And let me reset my view here. Nope, I've got all my zones over here. There just may not be any here because it's sideways. So I do have zones. Market flow starts on the first bar. So I do have market flow. And let's just run it and see if it gets better, or we'll just go 10 times. Market flow is there. HVA is there. There's a mid band. There's triggers rolling. There's your short. That's a sideways market, so that's probably a lot of why there's not zones. But yeah, they did disappear on my small chart too, it seems. So I don't know. You may have challenges like that. So let's do this. Let's do this. Um, I'm gonna leave. Um, so what I would do, um, if I were going to, I want to do replay. So Paul, you're a trend trader, right? You're a trend trader. Yeah. So if I'm going to do replay, what am I going to do? I am going to do a couple things. First thing I'm going to do is I'm just going to focus on my large chart reads. I'm going to focus on trigger direction. I don't need zones for that. I'm going to focus on clear path using the indicators that I have. So I'm going to have strong triggers. I can see the midband. Then I'm going to say, hey, I've got a trade. And then Paul, even without the zones, and let me take the zones off. Get that off of there. So now without zones. Did this pull back to an area and close on the correct side of the triggers with space? It didn't, right? Even without zones. I still have to wait for a midband, and I still have to wait for a close below. So even though it's not 100% realistic, can we agree that you could still time out your entries? You could still get in on the right side of triggers. You could still go through the thought process of making sure that the large chart is up or down, is clear, is strong, weak, or transition. So I think there's still a lot you can do even without zones. You could do the same thing without market flow. Hell, I don't even need market flow on there to see whether or not I made it to an area, to see whether or not I got a close. So I think the challenge, Paul, and I could be wrong on this, and guys, I'm wrong a lot, trust me, is that without the zones, it doesn't feel like real money, right? Without the zones, it's not accurate. But if I go to the driving range, I'm never going to get a par. I'm never going to get a birdie. I'll never get an eagle, and I'll never get a triple bogey. I'm not going there to have a realistic outcome. I'm going there to learn the muscle memory that helps me in a real world environment. So you could be frustrated by not having them, or you could say, okay, my small triggers are rolling up. Here's my only option. Let's see if they get there. And they either will or they won't, right? And you can still go through all of the process of being in the right direction, of having a large chart clear path, of waiting for pullbacks to areas, and then ultimately you, let me see, does that make sense? So I think that I can see where your frustration's coming in, I really can. Organic, was that Wayne's replay, Paul, or was that Wayne scrolling back and looking? There's a big difference. I think he was scrolling back. I don't think he was doing replay. I think Wayne was scrolling backwards. In looking at historical. I could be wrong, though. Yeah, I don't think Wayne was actually doing replay. Tell the issue, Organic. Tell the issue. That's like walking to the doctor and going, it hurts. And that's all you tell them, right? So yeah, Paul, his was just scrolling back in the morning, looking at what he thought it was opportunities on a couple of those, not actual replay. I think that's the difference, I believe. No worries. It's my job is to try to sound smart every now and then. Every now and then. Hits the area with a great deal of rejection. Can't go short, odds favorable up, I'll go long. There you go, Andy. I don't know why you're doing what you're doing, but I know you got in on the good side of the small triggers. I know that you had room to trouble, and with all that momentum, you decided to go with the small chart momentum, and that's kind of cool, right? The immediate strength, guys. There's ways outside of the very basic. So, Organic, what was the challenge with executing a trade? Maybe I can help. If you don't want to discuss it here, get with Jason and Tech. Let's figure out what's going on. Oh, look at that. While we were talking, it pulled up to the midband and closed below. I'll be damned. Can never fix anything if we don't know what the challenge is. I can never help, guys. I can't help you with your trading. I can't help you with anything, with your ATM strategies. I can't help you with your chart reads if you don't tell me what it is you're doing. And we love to post in the room and talk about. And it delays to execute. So show me a picture of your chart, Organic. Do you have an orange D up at the very top? Somewhere around here? Because it sounds like you may have delayed. Okay. So how long's the delay? Is it a second? Is it a minute? Is it 10 minutes? Sometimes we just mash sell and it takes it 4 or 5 seconds because, I mean, it's still just a computer. It's still got to process everything. And if there are 10,000 orders at the same time, it just may not have someone on the other side of your trade, which is very possible as well. It's rare, but it does happen every now and then. I would get with Jason. I would put a ticket in with Tech, and I would say, hey, here's what's going on. Can you help? And let me get you a link to Tech. Jason has seen pretty much every challenge that can present itself on both platforms, and he has memorized a fix for all of them. Jason is pretty outstanding. I am in the Jason fan club. There's no doubt about it. But that's one of those ones that's hard to diagnose from where I'm sitting, as much as I wish I could. Guys, is there something you'd like to talk about? Is there a topic you've been wondering? Trading View? You've had delays and usually completely load the chart again and it takes care of it. Thank you for that, Andy V. One of the reasons I love this community. So, Organic, it sounds like Andy has had the exact same problem, and one of the ways you can reload is just hit F5. And if you hit F5, it'll go through and kind of re-up everything for you. And maybe that'll fix what ails you. I love it. Thanks. Thanks, Andy B. Let's see what you got. All right. Yeah, I would get with Jason. That's awesome, but I don't have any idea where the challenges came from. But it doesn't look like, it's hard to tell because it's so big. Delayed data would show somewhere to the right of what we see over here, but you would see it. You would see a big orange D. And if you don't see that, then you are real time, which is good. Yeah, let Jason roll around with it for a second. We'll see what happens. Price right at the midband and the edge of trigs. All right. I can't see your entry price. 06 and change. So E. Webster, you're welcome. Organic, I'm sorry I'm not more helpful. When you guys cover prices up, sometimes it makes it hard. So let's do this. Large chart read. Triggers are down. You are in the transition, which is okay. Just means I'll manage. And then the one thing is there's no room. There's just no room. From 0525, you are directly smack dab 100% into the mid-band. Do you see it? I mean 100%. There's nowhere to go. You're already there. So if you were going to take the trade, there's a couple things. The HVA is awesome, right? I love an HVA. But without a clear path, that HVA is not likely to save you. The entry was 6803. 68. I see 05 on the long, 03 on the short. Am I reading that wrong? Or were you 03 on the entry? So you took it just barely blasting through, hoping that prairie dog runs. Okay. Got you. Okay, so let me do this. Let me pull this back up. So I like this because this is a really common look. It really is, E. Webster. If I'm going to try to jump in just past trouble, strong triggers should be a staple in my diet. Large charts is decidedly down, right? And price is starting to clear trouble. What you don't have on the small chart is momentum pushing it. See how those large triggers are up? Small triggers are down, but the large triggers are still up. So one of the things that when you get these kind of jump in looks, and that's kind of what it is. This is you saying, I really hope that because price gets below, it's going to go, which is an awesome strategy when everything is right. And your large chart certainly gave an opportunity for that. I'm looking to see if I can find an example. There's kind of the jump in, but it has odds favorable, and it helps a lot. I'm just trying to find a good example. And I'm a little short on them. It did turn and then go. Right on. I think that's one of the things that I look for. If I'm going to jump in, that strong trigger look tends to pay dividends. And if I don't have it yet, and that may have been it right there. I'm not sure where it was. Pulled back to the area. Is that the same look? I don't even have a mid-band. Oh, mid-band's way up there. I'm not even sure. That's crude oil. I'm not even looking at the NASDAQ. Oh my gosh. And sometimes they just don't work. That's part of it too. There we go. There's that little head through. Didn't work because it's right into one-to-ones. There's that little head through. Without momentum, it pulls back. There's that little try to break through, pulls back. And the same is true in a lot of places. Don't really have the momentum. That little head push doesn't quite work. Without momentum, that little head push doesn't quite work. So I like it. And thank you for sharing a loser. And I think that's one of those things that pays dividends long term. If you're gonna jump in hoping that you're catching the breakout, have that strongest trigger look. And E. Webster, you've been around long enough to remember the momentum trade, right? All the momentum snap back to the area. It's that drive, it's that strong trigger that typically pushes the market. I like that lesson. That's a good lesson because we get so tired of waiting sometimes that we're like, oh, we're above trouble. And if there's not something pushing it, it can create challenges. Let's see. Opening up my little look-alike crashed Ninja Trader, so I'm bringing it back up. Has anyone noticed that there's like this really basic, this core approach to trading, the software, that it feels like, man, it's so simple. It's so basic. It's so just if then. And guys, that is such a foundation. And the further you get into things, the more you see. And then it begins to move, and you realize that while there's the best of the best, right? So when I'm looking at momentum path and entry, it's the best of the best. It doesn't mean that there's not opportunity beyond it. And that's one of the things that John Novak teaches, that he's so good at teaching, is ideas that there's small chart things that may keep you out of the perfect large chart look. And there's different patterns that show up. And I think that's one of the reasons why it becomes so imperative that you can do it easy before you try to do it hard. It was for me. This would be one of those times where we are below. There's the one-to-ones, and until they get below those one-to-ones, it's going to be a little more problematic. And without odds favorable momentum, it's going to be a little more problematic. And sure enough, even though the large chart said down, look at how the area on the 1 minute just jacked up your good time. That's a good example of why giving yourself room is good. There's so much waiting, Jen. And you say the less trades you make, the better day you have. It's so true. When you close down TradingView, oh, there's my favorite one. They give you these little notes. The market doesn't care about your position. That's one of my favorites. The market doesn't care. The market doesn't care if you win or lose. The market isn't out to get you. The market doesn't take your money. The market isn't a jerk. The market's just going to do what the market does. I always look for these little messages. I love them. But one of them, Jen, was that, and it was written out just like this. More trades, and it was an equal sign with a slash through it. More trades doesn't equal more money. And I don't think there's ever been a more true statement. I used to think the universe hated me too, Jen. Oh my gosh. So when I first started, this is just a funny story, guys. One of the things a lot of you don't realize is that everything I teach in this room almost stems from my own failures learning the software. And when trading looks like fun, and then you realize you have to work, and then you start getting lucky on sim and you go live. And man, everybody believes that going live is the only way to ever get good at this stuff. Guys, don't be afraid to sit on the simulator. Because if you get lucky on simulator, that luck typically runs out. It's called a short-term victory, creating long-term failure. This is what happened to me, and I lost $5,000. True story. It was about 2.5 hours, 3 hours, 21 or 22 trades in a row. $5,000 out of my account instantly. $5,000. I had to tell my wife, hey, guess what? The trading account's at $200 now, because I don't have any freaking idea what I'm doing. Because I never wrote down rules, and I never studied, and I never took pictures, and I never participated in class. I felt entitled to win because my last name was Novak, and I hate to admit that, but it's true. And it dropped me down all the way to the I don't know shit stage. And forgive me for swearing. And guys, it was right here. And Jen, you were probably there. And Andy, you're at this stage right here. Guys, when we think we can do it on our own, very often we can't. If everybody could just, if you could watch videos of Tiger Woods and become a professional golfer, everybody'd be a professional golfer. So it was right here, Andy V, when I hit this low. A couple things happened. The first thing that happened is I was mad as hell at my brother because I somehow felt that it was John Novak's fault that I lost all that money. And then I was mad at the software because the software didn't provide me winners. And then I was mad at the market because the market took my money. And the only place that I didn't look was at me. And John Novak told me when he said, hey, here's software, here's rules. And he said, Mark, I need you to do something for me. I need you to write down these rules. And in my brain, I said, F you, John Novak, I'm smart. I don't have to write down rules. I know them. And then he said, Mark, do me a favor. Go find 10 pictures of a long trade that fit those rules, exactly what it looks like. And go find 10 pictures of a short trade, those rules, exactly what it looks like. And I said, not going to happen, John Novak. My last name's Novak. I have Nexgen software. I don't have to take pictures of your stupid trades. I'm just going to go make money. And then he said, Mark, participate in the room. Show me what you're doing. I can't do private sessions with you on the side all day long. Post your trades in the room. Tell me what you saw, and any challenges that you have, I'll fix. And guys, I didn't do it because I'm proud, because I'm egotistical, whatever the reason is. I didn't do it. I didn't follow the path that has been proven for decades. And he probably wrote this after. He probably wrote this out afterwards, guys. But there's a very decided path. So Andy V, respectfully, you stop posting in the room. You are wallowing in your own frustration without giving me a chance to help. I had someone the other day tell me how dejected they were. And I said, but you don't ever ask for help. You don't let me see what you're doing. I can't fix it. Guys, one of the things that comes with your purchase is live feedback every time. And guys, there's this idea, and this may hurt somebody's feelings, and I hope that it doesn't. There's this phenomenon called the 30-day stupid, guys. And I used to experience it when I trained managers. I would hand you a checklist that would lead you to success. Haven't been making? Okay, no worries. Oh, I'm sorry you're dealing with pain. But when you do, let me help, guys. One of the things that John Novak mentioned last time he took the classroom is he said very often new users create their own concept of what it means to have a rule met. Strong triggers have one look. And this is where I say simplicity pays dividends. Because in order to have strong triggers, it has to look like this. Or it has to look like this. And people, and we all have probably been there, and Andy V, you know I'm here when you are. People throw annotations, triggers are green, momentum. And that's not at all what it is. And people take a partial and they say small triggers up. Rule 1 met. And that's not at all what it is. And then they say things like down here, all red, strong, rule 1 met. And guys, we create this idea of what it means to have the rules met when the reality is the rules are very black and white. So if you never tell me how you're reading your indicators, I can't fix a mistake. One of the most common ones is termination conditions, where people say, that's not a good picture for it, where people say things like, well, the price started to break through, my path is clear, and they don't count triggers, or that area should break. And there's all these misconceptions, guys, and I try to teach this room to weed out the misconceptions, but we all have them. And as soon as you start participating, all of those fallacies go away. The triggers are down. It's transition, and there's no room on the small chart. And there hasn't been since 11:22 a.m. And any short trades that you took in here were based on hope. Does it mean the market won't go down? Of course not. It just means that it's not yours yet. So I encourage you guys to recognize and to realize that there really is an easy way to do it. Learn the rules, 3 rules. Know what it looks like. Use your spreadsheet. What does it look like to have the rules met? Here we go again. Same pattern. Momentum, potential to break, pull back to an area inside of triggers. And post in the room and get help, guys. Post in the room and get help. I feel like I beg people to let me help them become better traders. I feel like I beg people, just please give me the opportunity to help you find the success you want. Shouldn't be like that. Shouldn't be like that. You should be flooding my room like Wayne did earlier. You should say, Mark, here's 77 pictures. I need feedback, because that's the contract I signed with Nexgen, was to get that feedback and that help. All right, Miss Trina. Triggers up, strong side, pull back to an area, close on the correct side, and out. Out at trouble when divergence line printed above. I can't find anything wrong with it, Trina. You started on the large chart and defined direction. You followed it up with where price was trading in relationship to the small triggers. You had all the room to targets, and then you just let it pull back to the 1-to-1s and close on the correct side. Was printing above and disappeared? Okay. Great job. Great job. And Pete, it's true. I'm easy on you. John Novak will beat you up. Price at time was above triggers, and you went long directly into a zone, right? So E. Webster, I'll never tell you how to trade. Never. Promise. Not my job. But if these are down and you're going any other direction other than down, it better be perfect on your small chart. You are more likely to lose. Does that make sense? If these are down, this is a 15-minute small trigger, and I'm telling you, there's just no trade there. Not yet. Not yet. Just nowhere to run. Thank you for posting that. I know that you like above triggers. Yeah, no worries. Above triggers is awesome. But what happens, see how they're down? And it's since the moment they rolled, it's been nothing but down. It's been nothing but down. And E. Webster, your trade was the close on the correct side of the triggers on the pullback to the zone, because that one at 96 gave you room to get to trouble. It was just a trend trade. And you guys have been waiting for it for 25 minutes, and it finally set up. And down it goes with the large chart. And this is one of the biggest things that I see, guys. Our desire to be first gets us run over a lot. Clear path. I can see why you did it. But this market says nothing but down. The same way here, it was all long. Even when it got to the wrong side, it was all long until it wasn't. And though there's a great example overnight, from the second they rolled, it was all longs. Even from the weak side, it was all longs. And I think that is one of the biggest safeguards that the plan gives you guys, is resolving to just not fight those small triggers. And E. Webster, you're a rock star for helping me create lessons for the entire class with that look. Now, when is the exception? Have you guys heard of an HVA trade? Where when price reaches a termination condition, there's a very specific pattern on a small chart that can give you a shot at being the first one in, but it still depends on a clear path. And you may have had it on yours, Eric. Let me look real quick. Uh-oh. Uh-oh. Like there's a very specific pattern. And it would be that bar right there. White bar from trouble, smalls breaking above, gives an opportunity to get to trouble. And that's your one shot at going counter. And it died right at the zone. That's good stuff. It took me a while to believe it. And it took a lot of losses trying to be first. All right. Momentum, path, pullback, stop. It did work. It looks like it did work. That's a tight stop. How did you pick your stop? Yeah, no, I get it. You waited on the long because the zone being red at the time. So E. Webster, you mentioned that zone. That's it, right? You didn't discuss direction or path. You got caught up on the small chart. And that's totally cool. Look at this. I've got strong triggers. The challenge is the large chart it leads the way. It always has. It probably always will. I get sucked into small chart trades still. Does that make sense? Have you heard the story, John Novak's broker telling him he could pretty much guarantee $1 million in his account? And John said, how? And he said, I want you to put $3 million in and fight the trend every chance you get. By the end of the year, you should be down to $1 million. True story. And it just, especially on these minute charts, guys, it really holds true because it takes so long for things to change that you see a lot of fluctuation until they roll. Boaz, conventional wisdom has stops 4 to 5 ticks below the trigger lines on the trend trade. And it looks like it low ticked you. Just low ticked you. That's a bummer. And that may have even been 4 or 5 ticks. NASDAQ's a little different animal. If this one fails, close on the correct side becomes your new entry on the NASDAQ, just because it is a little different. Cav. Whoa. Cav says, Mark, I don't care about your eyes. There we go. Price pulls back to retest the 1-to-1s. I like that. Directly into it, comes back, creates the strong top, gives you momentum. It is trading directly into a termination condition, Cav, right? But Cav says, all right, I've been with Nexgen for a while. Let me look at that silly chart that Mark drops in the room every day, where he says, when I know what's working for me and against me, I can make decisions. So in regards to momentum, path, and entry, Cav's got all the momentum on both charts. He's got the perfect entry. The one thing that he doesn't have is the clear path. So Cav says, you know what? With all of these advantages in place, I'm going to take that trade. I'll manage it assertively. If something changes, I'll get out. But if it doesn't, I'm going to make some money. Nicely done, Cav. Hey guys, that's a medium probability scenario. So Cav, the only thing that I ask is when you took this trade, were you aware that that blue line could stop the market, and were you prepared to manage if it did? Yes. That's it. Take and manage. The challenge that new users have is they don't see that line and prepare themselves to manage. they see that line and they start saying things like, it should, I hope, it has to. And the reality is it doesn't have to. It doesn't care if you're hoping, and it never has to. It shouldn't even be a word. The language has to be, if something changes on my small chart at trouble, I'll manage. I'll exit. I'll go break even. I'll get paid at the first sign of trouble, whatever it is. And that's kind of where new users are headed and where experienced users find themselves. Take and manage becomes a big part of day trading if you decide that you need more opportunity outside of the very, very best. Most people find they really don't need more opportunity outside of the very, very best. It's just a way to fill time because they hate to wait. There's divergence low. Transition, down transition, not a lot of room to trouble. It would have to pull higher to give us room back to trouble. Guys, we got about 10 minutes.